and welcome to the show. Today is March 8th, 2022. Let me start by saying that I am not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. Today we'll be talking about stock symbol CEI, Camber Energy, and it looks like there's more short volume than shares were issued. And this is a preview of what MMTLP and MMAT price action might look like. Those are metamaterials, torchlight preferred shares, and metamaterials itself. Right. So let's look at the price of WTI crude. So this is the price of oil that sells in Texas. So we can see it's $122 and headed upwards. Camber Energy, they're a small growth-oriented company. They have a primary subsidiary called Viking Energy, which has most of the business. And let's see. Viking Energy has an exclusive carbon capture system that's licensed in Canada, exclusive license for that in Canada. And they also have interest in oil and natural gas assets in the United States. So that's quite interesting there. So Camber Energy is basically an oil and gas play. Camber Energy is basically an oil and gas play. This is the price for Camber Energy. As we can see, they have not been making money. They've been losing money, so the PE ratio has been negative. They closed their stock price today closed at $1.24. And if we look at the market cap, it's $310 million, so it's a relatively small company for oil and gas. And there are 250 million shares outstanding. Okay. This is the price action of Camber Energy. Okay. Couple things to note. Prior to a few days ago, the volume was near zilch. The volume was significantly lower. On Friday, the volume increased dramatically at the latter half of the day. It went up dramatically, and with that price, there was a lot of buying action that took place on Friday. It took the price from about 55 cents up to about 80 cents or so. Okay. On Monday, it opened pre-market at about a buck per share Monday. It just gapped up. Okay. And then in pre-market, it dropped down back towards 85 cents a share. But when the market opened, volume increased dramatically, and we saw the price increases go up significantly. And on Tuesday, we saw the price increase dramatically in pre-market open, and we saw volume spike at the opening, where the price went up to almost $2 a share. And then somewhere around midday or so, the price dropped significantly due to large amounts of short selling. Right, we see a large volume spike and a massive drop in price, and that we can identify at this point due to short selling. I'll explain how that works later. So currently, it's closed the day at about $1.24, and in after hours, it's somewhere around $1.40 or $1.34, somewhere around there. Yeah. But this is a stock from 6 months ago. 6 months ago, it was around $4.50. So Camber Energy has been attacked by a short seller called Kerrisdale Capital, and they've pushed the price down significantly over the last 6 months, and to the point where it was down to below 50 cents. It was like 45 cents just a few days ago. Okay, which is indirect. Which is directly opposite to the price of oil, right? The price of oil has been increasing dramatically, and yet this stock has been decreasing dramatically. Now with the stock price of oil increasing so much, this makes Camber Energy an interesting play, and the short sellers might be caught. Let's see. Anyway, this is the price of WTI. So as we see, the price of oil has been going up significantly. The price of Camber Energy is down significantly. The two don't correlate. The two do not correlate. And what does that mean? That means that we may be seeing a correction coming up soon. Who knows? It's hard to say. but it's probably likely. So this is the short volume this is a short volume of Camber Energy as shown by Chart Exchange. So if you go to chartexchange.com and look up Camber Energy, you'll find this chart. Go to the short volume. If we look at the short volume in the last few days, we see that the total volume reported is somewhere in the range of 355 million shares on Tuesday, today. And on Monday, it was 307 million shares of short volume. Okay, total volume was around 586 million shares that was reported today. The total volume of the entire thing is even more insane. It's like 700 million shares or so. But according to Chart Exchange and the data that was reported to Chart Exchange, this is the short volume and the total volume. Okay. Compare that to the stats of the stock itself, specifically to the shares outstanding. We have more short volume than shares outstanding. More shares were shorted as of today than shares outstanding by over 100 million shares. Okay, over 100 million shares more short than there's over 100 million shares that are more short than they actually even exist. Okay. And yesterday, there was about 50 million shares more short than actually exist. That's insane. That's just insane. So, 6 months ago, Camber Energy was trading around $4.50, $5.50, and oil was $75 a barrel. Today, Camber Energy is at about $1.24. It's down 77% from the price it was 6 months ago, primarily due to short seller Kerrisdale Capital and other short sellers. Kerrisdale Capital is just the most public one of them all. Oil is trading at $123 per barrel, and that is up 64 cents than the price of oil was 6 months ago. Okay, 64% increase in the price of oil and 77% decrease in the price of stock of Camber Energy. So if Camber Energy just gets back to the price it was before, right, 6 months ago or so, to $5.50 a barrel, to $5.50 a share, that's a 344% increase in gain from today's price of $1.24. It's possible that if that happened, you might just trigger margin calls on the shorts, and as a result of that, the price could continue in an upwards trajectory. Basically, it's possible that Camber Energy could do a short squeeze or a gamma squeeze similar to what Gamestop did, right? So it is quite possible that Camber Energy could be a repeat of Gamestop. And so with more shares and shorts, with more shorts and shares, could it be a GameStop? Let's listen to what Thomas Peterffy had to say about GameStop back then.
So if the shorts had known, if the longs had known that they have the right to ask for their shares,
yeah,
and they really wanted a short squeeze, that's what they would have done.
You're not testifying.
So that was Thomas Peterffy in an interview at Bloomberg. Here's a statement he made earlier in that same interview. Okay.
Let's just start with this simple question: how close we were to this system breaking, something failing? How close were we, Thomas?
We were frighteningly close on January 28th when we had 50 million registered shares. At the same time, we had 70 million shares short and 150 million shares short via short call options. So if the call options had been exercised, the shorts would have had to deliver 270 million shares while only 50 million shares existed. So as the rules are today, the long broker has to, if he can't get the shares, he has to go into the market and buy the shares at whatever the price is. So that could have pushed the price further up into the thousands. When that happens, obviously the shorts cannot pay up. So the brokers, they default on the brokers default on the clearinghouse, and the whole thing is a huge mess that's impossible to untangle. So there is a simple solution for this.
So it's a big mess, basically. That's so Thomas Peterffy says. But if you were long and that happened, I don't think you'd be complaining because you would have made out quite well. So if the shorts get margin called in Camber Energy, I'm thinking that $25, $50, or even $100 per share may be cheap. Okay. Because Gamestop, don't forget, they went to about $480 per share. So that's, you never know. Again, I'm not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. So, why does Camber Energy matter to Metamaterials Torchlight preferred shareholders, right? Why should this matter to us? Well, the reason it matters is that the short interest in Camber Energy is extremely high. There are more shorts than shares in existence. Okay, and that's been confirmed by the chart exchange data alone. We know that Camber Energy stands to benefit from high oil prices. The shorts are likely trapped. Because of this situation sounds very similar to the situation with Metamaterials Torchlight preferred shares, where high oil prices can result in a very high dividend, and the shorts of Metamaterials Torchlight preferred shares could be trapped as well too. So if this is a preview, this is something that you might just want to be aware of, because we might be going through the same thing in the future. I also happen to be an interested party in Camber Energy. I own shares of Camber Energy as well as shares of Metamaterials and Metamaterials Torchlight preferred shares. Well, I own all these stocks. So I am an interested party, just FYI. Anyway, the president recently delivered a speech about oil prices and oil and the Ukraine situation. Let's hear what he had to say.
Today, I'm announcing the United States is targeting the main artery of Russia's economy. We're banning all imports of Russian oil and gas and energy. That means Russian oil will no longer be acceptable at U.S. ports, and the American people will deal another powerful blow to Putin's war machine. It should motivate us to accelerate the transition to clean energy. This is a perspective that our European allies share, and the future where together we can achieve greater independence. Loosening environmental regulations or pulling back clean energy investment will not lower energy prices for families. But
So that's what the president had to say about oil, right? He's basically saying that we're not going to be buying oil from Russia. That's about 3% of oil that we're not going to be getting anymore. And so the price of oil is likely to increase, and we're not going to make life any easier for oil producers in the United States. So we can't expect any increase in volume from there. So we're likely to see a reduction in supply, which is going to mean an increase in prices, because price is where supply and demand meet. So, interestingly enough, he did mention clean energy, and Camber Energy has a clean energy solution with ESG Clean Energy. They're doing it basically they have access to ESG Clean Energy's patented inverted Brayton cycle technologies, which is an exclusive patent in all of Canada, and they have the rights to use it in the United States as well too. So this is a carbon capture. It's a carbon capture system. It produces distilled and deionized water, as well as urea, which is NH4, ammonia, which is NH3, and it also produces ethanol and methanol. So it's pretty clean. It's a pretty cool system, actually. So ESG, interestingly enough, was disparaged by short seller Kerrisdale Capital, who said their stuff is basically crap, and ESG said, they took offense at that. So they decided to respond to Kerrisdale Capital with their own report on Kerrisdale Capital's short report on Camber Energy. So they debunked Kerrisdale Capital's short report. Links will be provided, of course. They did a pretty good job. Basically, Kerrisdale Capital has no idea what they're talking about, and they said they have no scientists. They don't know anything about clean energy. They don't know the importance of clean energy, nor do they know any of the importance of carbon capture, and they don't know anything about carbon credits in Canada, which can be a significant amount of money because of the carbon taxes in Canada. So Kerrisdale Capital is basically, who knows? They're out of it. They have no clue what's going on. But they are short. Okay. Anyway, their short report was debunked by ESG Clean Energy. The other clean energy solution that's coming out of Camber Energy is they recently acquired this renewable diesel facility in Reno, Nevada, I believe. So biodiesel, renewable diesel, clean energy, there you go. What can I say? They're in the clean energy area, which is what the president wants to emphasize for growth. And there you go. But not only that, the banning of oil and gas, the banning of oil and gas from Russia means the price of oil is going to go up. We're not going to increase U.S. oil production, so supply will decrease significantly, while demand remains constant, and as a result, you can expect the price of oil to increase, right? And that's what we're seeing. So we're currently at $123 per barrel of oil. And if we look at Camber Energy, their stock is down significantly compared to the price of oil. Although it has risen a little bit, it has not kept up with the price of oil. Certainly, thank you, Kerrisdale Capital, for pushing the price down and making this a bargain. If we look at, so we can just go back and forth and see the price of WTI and Camber Energy. Definitely has not kept up with WTI. If we look at MetaMaterials Torchlight Preferred Shares, that it also has not kept up with the price of oil, right? The price of oil, MetaMaterials Torchlight Preferred Shares. This is more of a flat price action here, whereas the price of oil was increasing dramatically. So that's also not taken into account, right? And if we look at MetaMaterials itself, MetaMaterials has just suffered a short attack after short attack. And because MetaMaterials is a parent company that will be issuing out the dividends for the Torchlight preferred shares, for the Torchlight assets which are being sold, and those Torchlight assets will result in the Series A preferred shares dividend being paid out, which is the MMTLP dividend, we can see that MetaMaterials price itself is quite low. Right? With that, looks like there's opportunity here. But I'm not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. But there could be some opportunity here, and this could be Camber Energy could be a preview of what MetaMaterials and MetaMaterials Torchlight preferred shares looks like in the future. I don't know. Future looks pretty bright in terms of oil. So, talk to you later. Bye.